Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world and try to find where the money is really flowing to. Today we are diving into a bit of a financing move from Greenpro Capital Corp, GRNQ. This report is all about how they are raising some cash and what that means for them and for you. Do you ever wonder how companies get that extra boost of cash to keep things running or to fund new projects? Well, Greenpro Capital Corp just gave us a peek behind the curtain on one way they do it. This is the US Securities and Exchange Commission, or SEC report from Greenpro Capital Corp. Basically a way for them to tell the world what is happening with their company, and usually it is about something important. The official date of this report is the 17th of November of 2025, but the earliest event they are reporting on happened a few days earlier on the 14th of November. We're looking at Greenpro Capital Corp. They are incorporated in Nevada, and their stock ticker symbol is GRNQ, which trades on the Nasdaq Capital Market. Their main office is in Kuala Lumpur, Malaysia, so they are an international company. Now to the juicy part, what is this filing all about? It is about what they call subscription agreements. Think of this like a company saying, hey, we need some money, and these agreements are how they get it from certain people. So on the 14th of November, the company signed these agreements. What did they agree to? They agreed to sell shares of their common stock. This is not something they did on the open stock market. This is a private deal. They sold 150,000 shares of their stock at $1.30 per S-share. This is a private placement, meaning they offered these shares directly to specific investors, not to the general public. So if we do the math, 150,000 shares times $1.30. A share that brings in $195,000 for the company. That's the gross amount before any expenses. And this deal, this offering, it closed on the very same day they entered into the agreements. So it was a quick transaction. Now, why is this a private placement and not a regular stock offering? They are using an exemption under the securities laws. This means they did not have to go through all the lengthy and expensive processes of registering these shares with the SEC for a public offering. They are relying on rules that allow companies to sell securities without public registration if certain conditions are met. The reason they can do this is because they believe it was not a public offering, and importantly, the investors who bought these shares are considered accredited investors. This means they are financially sophisticated individuals or entities that meet certain income or net worth requirements. The SEC has these rules to protect average investors from potentially riskier private deals. So what are they going to do with that $195,000? They plan to use it for operating capital. Basically, this is money to help keep the day-to-day business running. This could mean covering expenses like salaries, rent, or other costs needed to operate the business. It is not for a big expansion or a major new project, but for the essential functions of the company. This section is basically a confirmation of the previous point that they sold equity securities, meaning stock, and that it was not registered with the public. And here we have the supporting documents or exhibits as they are called. The main one is the form of the subscription agreement itself. This is what the actual deal documents look like. And then there is the interactive data file for the cover page. And finally, we have the signatures. The authorized representative of Greenpro Capital Corp is Lee Chung Kwang, who holds the titles of Chief Executive Officer, President, and Director. He has signed off on this report confirming its accuracy. So what does this all mean? Greenpro Capital Corp needed about $195,000, and they got it through a private sale of stock to accredited investors. This is a common way for companies to raise funds when they don't want or can't go through a public offering. It is a way to get cash quickly for operational needs. From a business strategy perspective, raising funds through private placements can be a quick way to secure capital without the dilution that might come with a public offering if shares are issued at a low price. However, it also means the company is relying on a smaller pool of investors. Using the funds for operating capital suggests that the company may need this money to cover ongoing expenses rather than for significant growth initiatives. Warren Buffett would likely look at this and ask if this is a sign of a company that's struggling to generate enough cash flow from its operations, or if it is simply a strategic move to manage its finances. Without more financial statements from this specific filing, it is hard to say. Typically, we would want to see their balance sheet, income statement, and cash flow statement to truly understand their financial health. This report tells us they got a small injection of cash, but it doesn't tell us if they are healthy or not. Now, looking at the bigger picture, Greenpro Capital Corp is in the business of capital management and advisory. They help other companies access capital and provide financial services. Raising capital for themselves is therefore a core part of their own operations and survival. The risk here is if they are consistently needing to raise small amounts of money like this, it could signal underlying issues with profitability or cash generation from their core services. On the other hand, If this is a one-off event to bridge a gap or fund a very specific short-term need, it might be less concerning. The key opportunity is that they continue to have access to capital, which is crucial for a business like theirs. The risk is the cost of capital and the potential signal it sends to the market if larger, more consistent financing needs arise. In conclusion, this filing shows a modest capital raise for operational purposes. It is a practical financial maneuver, but without seeing their full financial statements, it is hard to make a definitive judgment on the company's overall health. It is a small piece of the puzzle in understanding Greenpro Capital Corp. Alright, that is our quick dive into Greenpro Capital Corp. This recent filing, what is your take on companies raising capital through private placements? Do you think it is a smart move or a sign of trouble? Drop your thoughts in the comments below. If you found this breakdown useful, please hit that like button, it really helps us out, and subscribe for more corporate insights like this. Don't forget to join our Discord community, linked in the description for more discussions. Thanks for watching, and we'll see you in the next video.